Hey everybody, Artwood Mortgage Team, your favorite mortgage guy on the planet. If you didn't know, just ask me, I will tell you. Well, guess what? The Fed's lowered rates. Also, guess what? Rates went up. Mortgage rates went up. So there was a 99% shot that they were going to lower rates. They did. The other thing that I talked about before was they did announce the end of quantitative tightening, which was them selling off their balance sheet of treasuries. What we were hoping was that they would actually reinvest those as the treasuries roll off. They were not reinvesting them, so they were a net seller, as opposed to when rates are going down, they're a net buyer. But instead of saying, hey, we're going to let them roll off and we're going to reinvest them in mortgage-backed securities, which would have lowered rates because it made them a buyer of mortgage-backed securities, they're just going into treasury bills. So there may be some indirect effect there, which would be great. But the big kicker is when Fed Powell got up there in his press conference and they're like, yeah, and we're going to lower rates again in September or in December. And he's like, heck, I have no idea. We don't have any data. That's not a foregone conclusion. And the market did not like that. You got to think with the government being shut down and what have you, there's limited data out there, but he just stopped him in the tracks. There was a 90% chance before that meeting that they were going to lower rates, or it's predicted 90% chance they were going to lower rates in December. So we'll just see, but we're basically up an eighth after the announcement. So I will keep you informed. It's always an interesting day in the mortgage business. Never a dull moment, especially when I can turn your mortgage into a work of art. Have a great day.